thank you everybody for showing up here to learn how to keep more in 24. Isn't that just the catchiest little title? It didn't work in 23, but it works this year. So, my name is Alex Fenske, and I am a base coaching group agent coach, as well as an agent myself, a Keller Williams team leader here in Orland Park, Illinois, KW approved trainer, and I'll show you my little intro slide, and then we'll get talking about what we're going to talk about today. So I've been in the business for, I guess it's about 16 years now. And if you want to connect with me, because you're one of those few people that's like, wow, that guy's cool, then you can hit me up on my little link tree right there. Can't hear anything. Let's see. I can't hear. Can you show me a hand if you can hear me okay?
Alex, I can hear you.
Yeah. All right, Erica, it might be your audio settings. That sounds like everyone else is rock and rolling. So there's a little bit about me on the screen there. A lot of the things that I teach and talk about and specialize in working with agents on are the realm of like the one thing in terms of goal setting, habits and productivity, time blocking, all that good stuff. Business planning, including the MREA Business Planning Clinic, agent financials, a lot of work with small teams from when people are just starting to introduce leverage to their business, kind of the maxed out solo agent up through about level 4. And I do enjoy smoking some meats. That's not, I don't coach people on that per se, but I do enjoy it. So I threw that in there. Today in this little session that we've got, I've got 3 things that I want to make sure that I convey to you and that you leave with. And that is this: to understand the why and how of these 3 things. Number 1, why and how to separate your business finances from your household finances. It's a really, really important step that actually carries a lot of benefits that maybe some of which you haven't thought about. Number 2, why and how to engage in what I will call leveraged bookkeeping. And number 3, why and how to pay yourself a salary. So I trust that you're on this call because you're probably not already doing all these 3 things. So I'll spare us the, show me your hand if you do this, this, that. We're just going to go through all 3 of them. I will ask, I'm going to do some checks for understanding as we go through. So if I ask for your input or whatever, type it the chat, come off mute, whatever works for you. I can't see all of you on my screen because I got like 3 different windows here I'm looking at. So pipe up if you have a question. I'd be happy to answer, and we should have plenty of time to get through all this. Here's my customary disclaimer. I'm a real estate agent, y'all. I'm not any of this other stuff. So when it comes time to planning for your income taxes, when it comes time to, making choices between different types of accounts and all that stuff, you got to consult with the appropriate professionals. I'm just going to give you enough to be dangerous. Isn't that fun? Yay. Step 1. Let's talk about why first, and then how you would separate the money that you earn and spend in your real estate business from the money that you earn and spend at your household level. This was something that I did relatively early on. And looking back, I'm so glad that I did. I can't remember if somebody told me to, or I don't really know. But I found myself doing it, and I saw the difference when I would talk with other people who hadn't. And I'm like, wow, this is really critical. So here I'm going to ask for your ideas, and then I'll go through a few that I've written down. Why do you think it would be important or helpful to separate the money from your business and household? Why do you think that's important? What do you think that does for you? You type in the chat or come off mute.
I think from a tax perspective, it would be easier to kind of grab all your expenses from your business account instead of, weeding through your personal account and picking them out.
Because at the end of the day, are you really, when it's tax time and you got that long list of things you got to do, plus it's busy season because it's spring, are you really going to sit down and identify each individual transaction in your big giant printout of no, you're not. And then what you do is then you end up with, well, my accountant pointed out one time, he's like, if I was the IRS, it's this kind of tax return I'm going after. All of the expense categories end in 3 zeros. Like everything is just magically like around, 10 grand on that. I spent 13 grand on that. It's like, it's clearly someone just made this up, right? So yeah, you're right. I mean, if you did that, it would be a huge pain, and odds are you won't, which means odds are you're going to do lots of rounding and guessing on your tax returns, which carries its own risks. So yeah, great point, Elizabeth. Who else would like to share what would be important about separating your business money from your personal money? Come on now.
We have someone shared liability protection in the chat.
So separating the money itself alone probably won't give you any liability protection, though if you do have a separate business entity and you're still commingling the money, that may actually invalidate your liability protection. So in conjunction with a business entity, it can help to enforce that. Absolutely. Yep. What else?
You know where you stand on everything. You don't have a false sense of security that you have a ton of money when you have another, $20,000 coming out of that account next week.
Yeah, if you don't have it separate, and I ask you how much profit did you make last month, last year, whatever, how do you even know? You don't. There's no way to know, and so you're kind of operating in the dark. I jotted down a few things that some of which you just said. Number one, it's clarity, right? You can actually see how much money came in and how much money went out, whereas you really can't if it's all together. You can capture all possible tax deductions. Like Elizabeth said, if it's charged to your business account, it's deductible, period. So you just make sure all that stuff flows through, and there you got all your deductions. Oh my goodness, does it make tax time so much easier? Oh. And if you're working with an accountant, which I do highly recommend, they will love you just that much more. It will put you in a position to create the standard or core business financial documents, which is an income statement and a balance sheet, more so the income statement. It'll allow you to do that, which then can lead to all sorts of other insights into how you can improve your business. And lastly, really importantly, it'll set you up to be able to operate your household on a budget via paying yourself a salary. So the one kind of feeds the other. You're going to find out why that's so important just in a couple of minutes. So that's why. Does anyone have any questions on why you would do this, or any concerns about separating that out before we get into how to do it? I'll give it to three once, twice, and let's talk about how. I like to take things that seem complicated and help make them simple, because I think we hesitate and avoid trying to execute on things that are complicated. I do. And I think that doing this might not be as painful as you may have guessed or as you may perceive. So I'd like to make it really simple as to how you can do this. You only are going to need two accounts. You're going to need, well, I guess you don't need, but I recommend, and it's wise, to have one credit account, a credit card or a business line of credit. And this is where you're going to put all of your ordinary recurring charges, all your subscriptions, your monthly fees, bills that are able to be put on like an auto charge or whatever. You're going to put all this stuff onto your credit card or line of credit. And then you're going to pay it off.
Read my car.
So when you do this, it is important to pay it off, because rates on business, if this actually is a business account, the rates tend to be higher than on personal accounts. So you really want to be carrying balances here, and that's why I say yes, you should pay it off monthly. And then the second thing you're going to need is a checking account. And that's where all your cash is going to get deposited from your commissions or any other real estate activities that you're doing. And then some things you can't use credit, or
Hello.
it's really expensive too.
It is.
Oh, this is great. I love that everyone's wanting to come off mute. I love it. So with your business checking account, that's where your income's all going to come in, and anything that's too expensive or doesn't accept credit. Like, what doesn't accept credit? What do you mean? Well, if you're paying somebody on payroll, you're probably not able to put that on a credit card. A lot of suppliers and vendors and stuff these days, I don't know if you found this, they're adding on credit card service fees to just about everything. So if you're going to get charged 3% fees to put something on a credit card, you may just go with the checking account. I want to have a little brainstorm here though of why is it that oh, did you guys just notice that I have number 1 and number 1? They're not number 1. It's actually number 1 and number 2. Go figure. I just noticed that right now. I'm like, look at that. So I want to have a little brainstorm. I want to hear from you. Why do you think that I'm recommending that you have a line of credit and you don't just operate everything in the checking account with actual cash? What would be the reasons for that?
I think it would build your credibility as a business.
It can build credit if these are business accounts. For sure, it'll build business credit. If they're personal accounts, it may build personal credit. Yeah, what else?
Help manage those fluctuations and cash flow a little better.
Absolutely, Terrence. That's a big one. Is you're going to get peppered with all these different charges and amounts at all different times in the month. But I don't know about you. I don't get paid evenly in my business. I get big chunks every now and then, right?
Right.
So what this does is it levels out your cash flow to where you're not going to get caught in a situation where you've got a big charge that came out of the account and it was before the deposit got made and all of a sudden you're in a tough spot, right? You're never going to get caught like that if the charges primarily are happening on a credit account and then you make one large payment, for example, at the end of the month to pay it off. Yeah, absolutely. That's a big one. What else? I can think of at least one other reason.
A lot of the credit card companies will break it out for you.
Yeah, they will. That's true. That's true. I hadn't even thought about that one, but yeah, they'll do some categorization for you anyway. Are you able to hear the phone ring right now? Can you hear that?
No.
Okay, good. It's really distracting for me, but all right. I'm glad you can't hear it. The last reason that I had written down was because of fraud protection, right? I've actually had a couple of these things happen recently. A lot of you probably have, where there's been a fraudulent charge on one of your accounts. And I don't know about you, but if someone's going to buy, their Ugg boots or something, they're going to, go run up some charges on some online supplier in China, I'd rather them take the bank's money that's not mine then take the cash out of my account because it's my debit card number that got lost or stolen somewhere. So from a fraud protection standpoint, it's also good to have that stuff charged there. And then it's Chase or Wells Fargo or Bank of America that's got to go chase the money down once they find out it's fraudulent. So your actual cash isn't at risk when that's not the account information that's out there floating around as much. So I like it for that reason. So it's literally just these two accounts that you need. Okay, separate from whatever you're using for personal. And I want to hit a few points about anything about these accounts. And after that, I'll ask for your input again a little bit. Number one, and this is the most important thing. Nobody said these have to be business accounts, like they have to be in the name of a business. And there's a lot of people get hung up on this because they're like, well, I can't separate my stuff. I don't have a business entity. And it may not be time for you to set up a business entity yet, because there's some cost to it and you got to have enough profit for it to make sense. These don't have to be business accounts. These can be accounts in your personal name, but they're just separate accounts. You just say, you call that one, that's my business account, right? But it's in your personal name. That's fine. That is fine to start. Now, once you do have a business entity, yes, you're going to want to open business accounts, but you don't have to. You don't even need a business entity at all to do this. You can do this 100% as a sole proprietor if that's where you're at. A lot of people have anyone got like a spare credit card account laying around that you don't use the card, but the account's still there. You want to keep it open for your credit history or whatever, right? Use that one. Make that your business credit card. It doesn't, and listen, if you're not spending more than you're taking in, then you don't have to worry about what the interest rate on the card is because you paid off. So, use a spare account. Now, you might not have spare checking accounts sitting around, but those are pretty easy enough to open, right? Carry the cards with you. Just, get the credit card and the debit card, put them in your wallet with the rest of your stuff. That way, if you have card swipes, most of what we do these days in the agent business, it's not card swipes, It's online purchases and recurring subscriptions and things like that. But if you keep them with you, you can't be caught in a situation where you go, geez, I didn't have that. And I had to spend this on my personal. And now I have to go remember to move the money and all, that can be kind of a pain. So just keep it with you. And lastly, you guys are going to want to argue. You're going to want to fight. Some of you are going to want to argue with me and take me out to the back alley about this final point. I promise you're not going to like it. You got to stop it with the points, right? Now I understand, and I can appreciate that there's some people that have made like an art out of the practice of using credit cards to get points and rewards and all that stuff. And it's almost like an entirely different hobby. And like, if that's your hobby and you're profitable at it, great. But we're going to Vegas for that family reunion event here coming soon. And there's a little phrase I'm reminded of: the house always wins. The house always wins. These credit card points are fooling you. Have you ever worked out the dollar value of a credit card point? It's like 1,000th of a cent. And you're like, I get 3x points on gas purchases. And then you run up gas purchases and you lose money because you get charged 1 month of interest, and the interest was more than the points were worth. So I get a lot of people that they're like, oh, but the points. And like, who cares about the point? Yeah. Oh, but the 21.49% interest rate. So you're more likely to be able to get caught losing with the interest rate than you are winning with the points. And that's why points exist, because they are offered to you by a for-profit company that is in the business of lending you money at high interest rates. That's what points are. Give you an example. I looked at I have like an American Express Blue card. It's not like the fancy one. It's like the entry level kind of schmuck American Express card. So I've got that one, and it's a point per dollar, right? So I mean, I usually just cash them in for like a Home Depot gift card or something. But each point is worth half a cent. So if I swipe 10 grand on that card, I would earn $50 in rewards. Okay, I could use the $50 at Home Depot. Got a lot of stuff I got to do at the house. But if I pay 5 grand and I carry the other 5 for a month, and the rate on that card last I checked was 18.24%, which, mind you, is lower than most, unless you're on an intro period. That is the average credit card right now is well into the 20s. That would be $80 in interest charges. So I just lost $30 by trying to play the points game. And that's carrying half the balance for 1 month. Automatically, you're already losing. So if you want the points game to be your hobby, fine. Do not do that if there is any chance that you're carrying a balance on an interest-bearing card. And if you want to try it out, and the first month that you carry a balance, just stop it with the points. Okay. That's not a strategy for business profit. You guys want to fight me now, or are you okay with this? We good? My people. You guys are my people. I'm sorry the sun is like awkwardly coming in the window right here on my face. It looks like it's like slicing me in half. I keep trying to move around, but it's like it just follows me. But we don't get a whole lot of sun here in the Chicago area, so I'm trying to soak it up. Coming up on the next slide, I'm just going to ask for your input. I want to find out what you take from this. This isn't super complex. It's not a mind-blowing conversation here, but what did you just take from what we just talked about in relation to the why and how? Why you would separate your business money from your personal money? What benefits that has, and then how to go about doing it with, what you need to do with these two accounts. Tell me your thoughts on this, or do you have any action items, anything that you just wrote down and said, you know what, I need to fill in the blank? Share a little bit with me.
Well, I think that most people think it's a difficult process, being that, it has to be a business account when it really doesn't. And just separating out your business money from your personal money is quite easy. And I think that's what you kind of gave to me, was that, yes, it is very simple and doesn't take a long time to do.
And you may even have one of the two necessary accounts already in your hands, right?
Right.
You just are going to update some subscriptions, go, hey, bill it to that card instead of this one. And you're done. That's it. Make your life a lot easier. Thank you for sharing that. Who else wants to share an aha or an action item for us?
I
I actually have a question. You were
Yes.
talking about how one of the big ahas for me has been that you don't have to have like a business entity to get a business account and just separating it. But if I did want to, create a business entity, you said you have to be at a certain amount of money that you're making, or how does that work? Or what was
You
that
don't-
about?
You don't have to, there's no rule around it. And I'll
Mhm.
probably do a future session specifically about selecting a business entity. Right now, I'm going to give you the super short version. The reason that I say you should have a certain amount of profit before you do that is because it costs
Mhm.
money to open it, costs money to operate it. You have to renew it every year. You have to file a separate tax return. And if your profit isn't enough, then it actually would cost you more to have the
To
business
have it.
entity than it would not
Mhm.
to. So that's why I say a certain amount of profit. And then once you do, there's certain things that you want to implement under the guidance of your CPA as to how you can maximize the benefits of that entity. And in the vast majority of cases, a real estate sales professional would likely be best served by an S corporation or an LLC with an S election. The whole purpose is around how it's taxed and it's different for different business entities. But like I said, I'll probably do a session about that topic alone at some point.
That'd be great. Thank
My
you.
accountant once told me a while back, if your net profit in the business should probably be at least about 50 grand in order for the costs of a business entity to be less than the cost that you would have without it because of the extra taxes or whatever.
Mm.
Well,
Use it as a
actually,
rough
I mean,
guideline.
I have a business entity and it's not an LLC. I'm just a sole proprietor. Just went online, got my EIN, had a name, filed it with the county. You don't have to file a different tax return. You don't have ongoing expenses, keeping it up every year. So in that way, I mean, that's all I needed to have an actual, business account was the name, and it filed with the county.
That's a great point about being able to have a separate name and have it, separate accounts that are under that EIN. You won't get any income tax benefits from that sort of setup, right? So if you're asking about income tax benefits, that's why I said an S corp or an LLC with an S election. But what you just described, Elizabeth, absolutely, you can do that. Get you a DBA, get you an EIN. You can have officially separate everything. Yeah. Thank you for pointing that out.
Correct. The only thing you don't have is just the protection in terms of liability. So at some
liability
point,
protection, tax benefits.
yeah, at some point you turn that into an LLC. So one of the ahas that I do have, it's partial with the whole credit line for your business. I did exactly that, was took one of my credit cards and decided to use it for like my medical insurance or what have you.
Yeah.
But what I could do is add my other recurring charges to it. I just hate using credit all the time because I don't like paying, like you said, pay it off monthly. I don't like extra charges in anything.
Yeah, definitely. And if you're, some people have had a history of challenges with the behaviors around credit card use and debt and understand, the way I'm describing this is sort of like an ideal way typically, but like if you're like afraid that you can't trust yourself to not just be irresponsible with it, because a lot of us are, right? If you're like, I don't feel like I can do it, then no, then running out of nothing is just one way, right? You got to customize it for you.
Right.
And if
And
you're
life
just totally
happens
averse to using it,
sometimes.
you don't have to do that. Yeah.
Correct. Life happens also. So
It sure does.
you
Yeah.
can't predict when life happens,
Yep.
but it does help. But the less you have on there, if you pay it off monthly in your good months, the better.
Definitely. Thank you for sharing that. All right. We're going to move to part 2, which is about bookkeeping. And I know that's like the most exciting word on earth. Like everyone's like, yes, I signed up for this for bookkeeping. But trust me, just like anything else, it's probably not as daunting as you think. Any parting thoughts here on our first chapter before we move forward? All right, let's do it. So we're going to talk about leveraged bookkeeping. First, what is bookkeeping? When I say that, What is it?
Keeping up with your like expenses, knowing where your money is.
Nope. It's simply just keeping track of your income and expenses. That's all it is. Just keeping track of it. We have this nice boring word for it, but it's just keeping track of your income and expenses. That's all. Doesn't have to be anything more than that. What's important about it? Why is bookkeeping important?
Being able to reconcile your income and expenses.
Yeah, like make sure you know where it all went, where it all is today, right? As a business owner, that's pretty important. I also think that when you can identify where the income came from, you can also figure out what things you do are the most profitable in terms of all the different things in your business, like which different lead generation sources, which different support systems are the most profitable. Well, if you're not doing bookkeeping in some way, you'll never be able to know that. But when I work with an agent who's got a P&L together, I'm like, send me your P&L. And I don't get the P&L and have decisions for them. I get the P&L, I have questions. I go, what did you get from this? How much return was on this thing? You know, is that the lowest cost option for that? You'd be surprised. By the way, if you've got unnecessary expenses, there's no faster way to make money than just eliminating them. Like that's so much easier than selling a house. You know, it takes on average like 50 to 60 hours to sell a house, start to finish, everything included. You know how many hours it takes to go and like cancel on some subscription you're not using? 4 minutes. That could be the equivalent of a net clearing commission. So keeping track of this stuff is really important. Now I have a question, live question for you. If you're not doing it already, why not? What stops you?
Maybe habit.
Yeah, you're
Getting
not in the
into
habit of doing it, right? You would have to start.
Yeah.
What else?
Lazy.
Something tells me you're not lazy, but okay. You don't feel
Not-
like doing it, or right? Okay, I get it. I get it.
Not knowing where to start.
Well, hopefully we can address that here today. It's not exciting. And that's why when you're saying, you avoid it, you don't have a habit of it, you feel like lazy about it because you just doesn't sound fun. And you may not have attached what those benefits are, right? You may not fully realize, like, hey, if I do that, here's what I can do with it or because of it. So let's talk a little bit about that. There's 3 different sort of levels that I think we can look at as it relates to bookkeeping. The first method of bookkeeping you might be already familiar with. What I call it is the shoebox of hell and lies. Are you guys familiar with this method of bookkeeping? Yeah.
Yeah.
Yeah. We're not going to spend a lot of time on that method. I suspect we already have. But that's the default method. That's what most of us do. The next level up from that is having some sort of a system that you manage on your own. And then the third level is to have a professional that does it for you. All right. So we're gonna go through these 3 methods and talk about what they look like and how to get them set up. Well, there's not much setup to do with the shoebox of hell and lies. So you already have that. It's the hell part is the all the receipts and all that stuff that it's like just scattered mess of bar napkins with things written down on it. And the lies are the lies of telling yourself that you're actually going to do something with all that. Like that you're going to sit down someday with your big stack of crumpled up receipts and those little twisty paper things that come out of the lint trap in the dryer, and you're trying to unfold them and you're like, okay, I'm going to do this. I'm going to do it on April 14th, darn it. But you're not going to do it. I'm sorry. And I don't think you should, and I don't think you have to. There's only one benefit of this method, and it's that it just doesn't take any time or effort. But it has a lot of drawbacks. There's a lot of cons here, which is that you don't get any information about your business. You're going to miss out on tax deductions. You'll have no understanding about the true profitability of your business, no ability to attach a return on investment to the things that you've invested into your business. You will not be able to measure the performance of anything inside your business. And it's pretty stressful because it's always on your mind. You're always like, I got to get the shoebox, got to do my day with the shoebox. Not recommended. I think we can all agree on that, right? Moving on to level 2. Level 2 would be a self-managed system. There's these services out there for it. You've heard of them all. QuickBooks Online is a really popular one. Quicken has a product for this. There's a couple other companies that are bigger that do it. FreshBooks, NetSuite. These are not recommendations. It's just some companies that do it. So what you do is you go and subscribe to one of these services. You can get them for a small business where you don't need a ton of extra functionality. Some of these you can get for as little as like $15 a month. Okay, and of course they can be more, but for a lot of us, that's all you need is like $15 a month or so. And some of the magic that these things do is that you link it to all of your other business accounts, right? So you sync your bank account and you sync your credit card that you use for your business, and it will automatically import all of your transactions. So you don't have to type in, you never have to take a receipt and go, oh, let me go and type in this thing that I bought on this date. I don't want you doing that. I want you spending your time with people, going on listing appointments, not sitting there typing in receipts. For $15 a month or 30 or $40 a month, this thing will do it for you. On top of that, once you get it going, like I mentioned before, I mean, most of your charges in your business are recurring charges, right? They're membership fees, they're monthly subscription sort of stuff. So it's going to be the same dollar amount from the same vendor. And you can just apply rules and go, every time this charge comes through, automatically call it that, automatically put it into that category. And so that involves some setup, but when you do that, you don't have to manually tell it where that expense goes anymore. And then the only things that you need to manually categorize each month are the one-time expenses and card swipes, which usually isn't that much. These systems will also produce statements for you. So you can just, you set all this stuff up and then you go click on run P&L and it'll run you a profit and loss statement. Now, right out of the box, it's not going to use, for example, the Millionaire Real Estate Chart of Accounts, which is really useful in our industry because it allows us all to be on the same set of categories so that we can evaluate our performance against our peers and against the best practices model. And that's really valuable. But even if you didn't do that, it's still valuable to have a profit and loss statement, even if it's just by traditional accounting categories. And it'll do this with the click of a button. The profit and loss statement that results will only be as good as the information you put into it. So if you didn't classify anything, if you didn't put categories in anything, it's just going to basically give you a list of like, here's all the money you made, all what you spent, and your profit. But that's more than you have already, isn't it? By the way, anyone ever try to get a loan from the bank and they want to know how much money your business profited? And the only thing you got is last year's tax return, and it's like October. Right. And they're like, yeah, we just want a year-to-date P&L. And you're like, oh my God. Well, if you're doing this, you can give them something. So this is pretty inexpensive and it allows for a lot of automation. So it does a lot of that heavy lifting for you. And if you really rely on that and you use only the business accounts for business expenses, you can throw away all your receipts. You don't have to keep your receipts. I don't keep my receipts. I have a record of every expense that comes out of the business because it's on the card accounts and it's in my QuickBooks Online. So I don't keep receipts. I have no shoebox of hell and I have no lies. This does, though, require that you set it up and you create the rules and you manually classify any of the one-time charges and card swipes. So it does still require a bit of time from your part. And perhaps most importantly, with doing it this way, you're not getting a professional's guidance. So this is far better than the shoebox, but it doesn't quite give you what a professional bookkeeper would give you. Why are we even going through this then? Because each thing costs more, right? You're going to hire a bookkeeper, a bookkeeping service. It's going to cost you more money. And depending on where your revenue is at, that may or may not be a good expense for you. But once you're at the point where you can justify and commit to paying a bookkeeper, I do recommend that as the way to go. And I will tell you why. So number one, I recommend that you hire a professional. Why? Well, it's just like you tell those FSBOs, isn't it? You tell them they should hire a professional to do a professional's job. At a certain point, you should probably hire a professional to do that job too for your business, shouldn't you? Stop trying to be an accounting FSBO. And I don't want you to, you don't make money doing bookkeeping. It's important, but it's not how you make money. Therefore, you hire another professional who specializes in it. Do you see the roasting marshmallows? That's because that was like my roast. I was like, oh, I roasted you because you tell FSBOs that. You see that? Let's all have a big laugh. Yay. Okay. Next up, the bookkeeper is going to be the one that manages that service that we talked about in the last one. Whichever one of those it is, whichever one you're using, they're going to manage it. So you're still going to need it. You're still going to need to pay for it, but they're going to be the ones that set up the rules. They're going to be the ones that create the MREA categories. They're going to be the ones that ask you at the end of each month. They go, hey, I got these 3 or 4 expenses that the rules didn't pick them up. What were they from? And you just go, oh, that's from blah, 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 blah. And they reply back with your P&L. And guess what? The P&L's done right, which is cool. I find it to be nice when it's actually done properly with the proper chart of accounts. And then my job isn't to make it. My job is to use it to make decisions. My job is to use it to go, you know what? Why does that expense look so high, that category, right? Or, I wonder what my next opportunities are with lead generation, or what am I, what's not serving me that I can just eliminate? Those are the sort of questions I get to ask myself when I review the P&L as a business owner, instead of spending my time trying to put it together. And I either never hit the finish line, or I have a report, but it took me so long to put it together, I don't have any time to look at it. Here, your time commitment in this is extremely minimal, and you can learn some great things about your business in 15 minutes a month when you receive your profit and loss statement and you look at it. And by the way, when you show it to your coach, put a second set of eyes on it for someone that asks you questions and maybe is wondering something you didn't wonder, or has an eye on your blind spot that you weren't aware of. It can be really powerful. So you're getting a professional to do this. They're going to be giving you guidance and advice. You're going to know it's done right. You get your time back, and you get to be a business owner. Those are all the things that are in favor of hiring a bookkeeper. On the downside, it just costs more money, but it may not cost as much as you think. I look back at my invoices, and I average a little over $100 a month for my costs of the QuickBooks online system, the QuickBooks payroll, like cost or whatever, because I have them. I pay myself a salary through my S corp, so I use the QuickBooks online payroll. Well, I don't. My bookkeeper does. And then for the actual time spent for the bookkeeper, I think I average like $109 a month. That's for my real estate sales business and my rental properties combined. That's what I pay. It's not much. It's not much for the insights that it allows me. The next slide, I'm going to go into how you go about doing this. Right. So, number one, I do recommend that you work with someone that works with other real estate agents, because you'll have an easier ramp up time period with them, and they'll be familiar with some of the things in your business anyway, just to start. I love the MREA chart of accounts because we can all get on one page, and then we can go and learn from each other, which is really, really valuable. By the way, chart of accounts, it just means that's the list of categories that you use, and they're unique to the real estate sales profession. They'll be different than if you were looking at a company that manufactures bolts, right? So there's sort of some universal like standards, but if you use the ones that are this chart that's customized to the real estate sales business, it'll be more relevant info for you. And lastly, someone who does your tax returns may or may not offer bookkeeping services. If they do, that's a great combo. If they don't, you're going to need them to talk. You're going to want a bookkeeper that will cooperate with your accountant when it comes time for tax filings and stuff, because that sort of information, they need to interface a little bit. Okay. What to expect when you're getting going with a bookkeeper is you're going to meet with them, going to interview them, talk to them a little bit, ask them about, some things that are important to you, and agree on whatever terms you have. And then you'll go through a setup process where you're gonna link all the accounts together. They're gonna ask you a bunch of stuff about where things go so they can set up all your rules. And the setup process does take a little time. I mean, I'm not gonna lie to you, it does take some time. But after that, there's not much time input from you. They're going to send you every month. They're going to go, hey, I need to know what these expenses were. They're not normal. They're not like monthly things that I have rules for. So you tell them, and they give you a report, and you review it. Also, this allows you to get with either the bookkeeper or the CPA and do reviews with them either every quarter or at least twice a year, mid-year, to say, hey, where am I at with my expected tax liability? If the second half looks like the first half, how much am I going to owe? Now I can save, right? That's what doing this allows you to predict that. And then at the end of the year, I always recommend a call with your CPA, usually first or second week of December, so you can form a little bit of a strategy before the end of the year, right? There's some moves I need to make before the end of the year to maximize my income tax benefits. I'd like to know what you get out of this conversation here about leverage bookkeeping. 3 things: shoebox of hell and lies, self-managed system, bookkeeper. What do you like about this? What are you going to do about it?
Hiring professional gets me my time back.
Mm-hmm. And that applies not just to bookkeeping, but to other services as well. That's a great one. What else?
The idea of sharing this with my coach, just to, like you said, to see the blind spots that I can't see because I'm looking right here, but they're like, what about this over here? So that's
I
helpful.
mean, honestly, that's so much of the benefit of having a coach in your industry is that you can't, well, as they always say, it's tough to read the label when you're inside the box. There's things that are obvious to other people. Joel Rico says, it's like having spinach stuck in your teeth. It doesn't take a brainiac to figure it out, but you can't figure it out. You don't know it's there. And everyone else is looking at it. Yeah, you got a thing going on there, right? Like you need another set of eyes on your business. It's worth it. It's worth it. Right. We're going to hit our last chapter here, paying yourself a salary. I know this freaks some people out. I remember a conversation I had where it was first put to me, and I was like, never really thought about that. Let's talk about why this is important. Biggest thing, it allows you to adopt a household budget. Everybody knows that budgeting, whether it's for your business or your household, is really important if you want to keep as much of your money as possible and not spend on things that don't really give you value. And in my own experience, it's like, oh my goodness, man, this will save your relationship. Anybody for those in real estate that are in a relationship, you have a significant other. I remember this time when my wife and I think, had just moved in. We were starting to we were engaged, we were merging our finances and stuff. And it was whatever month. And she looks at me, she goes, well, we're talking about money decisions. She goes, well, how much are you going to make this month? And I'm like, I don't know. Right. And she has a look of like disbelief on her face. She's like, what do you mean you don't know? I'm like, well, I don't know. I mean, I got like 3 deals that could close. I'll make like 20 grand, or maybe none will, and I'll lose money. I don't know. And she's like, how do you live like this? and if you do this right, your business has to live like that. Again, we do a relatively small number of transactions that are large in nature. We're not selling packs of gum here, right? It's uneven. It is by nature uneven. But you can make your household budget even so that you can actually make a budget and go, great, every month we have this much money to spend on groceries. How cool is that? And then organic groceries are not cheap. I'm telling you, it's like a mortgage payment. So you got to be able to plan for this stuff. It prevents you from stripping out of the profit of the business. If you're not paying yourself a salary, how are you deciding how much money to take out of the business? When you get a big commission check, maybe it's a little bigger than normal, and you're like, well, I'm going to take a little bigger than normal out of it. And then like maybe the next month you don't have that closing, and now you're kind of screwed, right? So it prevents you from overtaking from the business. And it allows you to understand and be able to predict how much money is going to come out of it when you're looking at budgeting from a business perspective. You know that this amount is going out to me personally every month, and that allows you to plan for your business budget. Here's how you do it. Number 1, you got to decide the amount. Now, in a perfect world, you'd start out with a living wage, the amount of money that you need to operate your household each month, whether you're the sole provider or you have a spouse that also earns, and your amount that you have to contribute is whatever. Ideally, you set your salary at the amount that you need to operate not for all the extra stuff, right? But the amount to cover all the bills, cover the groceries, without the extra extravagances or the, maybe not without the savings for vacation or a large purchase, but it's an amount that you can count on. If you can't start there, start smaller. It's fine, right? You'll get there. That's some more houses. Number one, you're going to determine the amount. Number two, just going to figure out how often you're going to pay yourself. If you don't have a bookkeeper and you're not running payroll, you're just basically moving money from one account to the other, and that's fine. You can set that up on an auto schedule so that it's consistent, but decide how frequently you're going to pay yourself. And then number third, actually set up the payments. So if you have a business entity, you're running payroll, then that's going to go through whoever's doing your payroll. I hope you're not doing your payroll yourself. I don't know what I would be doing. That sounds skin crawly to me, but set up your payroll. Or if you don't have an entity, you're not doing official salary, you're not getting yourself a W-2, then just set up the transfer schedule. All right.
Hey, Alex.
Yes.
Yeah, let's not forget the 15% self-employment tax for us people that don't have S corps.
Yeah, so that's gonna be a whole other topic.
Well,
And
I
a
mean,
lot of
if
people
you're
aren't even
gonna
aware
if you're gonna
but-
decide how much you're gonna give yourself, then you kind of have to factor that in there, right?
Yeah, I mean, it's part of the whole picture. At the end of the day, if you're a sole proprietor, Uncle Sam doesn't care whether that money stayed in your business account or went into your personal account. It's all yours anyway. So whether you moved it from one account to another doesn't matter. You're getting taxed anyway, right? So you're going to get your 15.3% self-employment tax, and then you're going to get your income tax on top of that, regardless of how much. You could have left all of it in the business account, but it's still getting taxed, right? So you're right that you need to plan for that, regardless of how much of a salary you're taking. Even if you have an S corp, right? And I mean, you're still going to get that tax to a degree, but it's on the salary portion, right? So there's no way getting out of it. You can minimize it with the proper business entity, but yeah, you're gonna need to set aside for taxes for sure. Now, depending on how you do this, you might give yourself your living wage regardless of taxes, and you have a separate savings account under the business for tax savings. Or you might say, hey, I'm gonna the amount I pay myself and my salary is going to include money for taxes. So when it hits my personal account, I'm then taking a chunk of that and putting that into a tax savings account. One way or another, you do need to plan for taxes for sure. And that's definitely another class, right? And it's an important one. Talk about a lot of financials. Yes.
So I just started. I haven't closed any deal because I just started last month.
Okay.
When did you start paying yourself? You don't make any money yet.
Yeah, it wouldn't be the first thing to do. If you can, starting out, I'd still recommend starting out with separate accounts. You have a separate checking account for your business, and a separate credit account for your business. I would still recommend doing that if you can. But you're not going to be able to pay yourself a salary until you have an income that's a certain amount of consistency and a certain dollar amount. And we're gonna look at a slide about that in just a second here. That's a good question. Yeah, it's not something you do immediately.
Okay, thank you.
All right. So look at this. Look at it. It's like you read my presentation. You've got to have enough coming in that's gonna cover the salary after your business expenses when you average it out. And you're going to have to leave the cash in there when you have a big month, because there's going to be small months, and the cash is going to have to be in the business account to pay the salary. And lastly, if you want to give yourself rewards, paying the same amount each month doesn't do that, right? But if you get to the point where you're like, hey, I have enough cushion, I'd like to take like a bonus or whatever, then you need to use some discretion and do that. But it's not built into it. Sometimes some of us get that adrenaline rush, right? Or that dopamine hit from like the big dollar amount deal that comes in. I don't want to rob you of that. You just got to make that decision as a business owner based on your cash flow. This is how it looks. If you had $180,000 in gross commission income that was spread unevenly throughout the year, where you even had a couple of months where you didn't have any closings, and you had a couple months where you made a lot of money. But overall, let's say you were going to pay yourself 50% of your gross revenue, meaning you're basically going to take, let's say you profited 60% of your GCI as a solo agent, and you left 10% of the business and you lived on 50% of the GCI, that'd be a $90,000 salary. And can you guys see the like the yellow bar that's going across? Yeah. That's $7,500 a month. And that would be half of the total amount of gross commission income. And in the months where you're blank, if you didn't take all this, if you didn't take all the gravy out of the gravy boat during June, then it's still in the account when September happens. You didn't close a deal. So this does work as long as there's enough GCI and enough income on the business side to do it. That is the catch, is you got to be selling enough houses, right? That's why I titled this course Keep More, not Make More. There's other classes for Make More, some great ones. You got to make more before you can keep more. So that's the catch with here. What questions or concerns do you guys have about paying yourself a salary or how that works?
I have a question on that graph
Yes.
you just showed.
Yep.
So the salary was it like an 8,000?
7,500.
7,500. Okay, got it.
Yep.
Thank you.
Yeah, that works out to 90,000 a year. Now, of course, as Elizabeth mentioned, that doesn't account for if you're doing this via payroll and you have payroll taxes. If you're not, then you're going to have self-employment taxes. There's more to this, which is why I always say you need to talk with your accountant. You need to, go to professionals. But for simplicity's sake, $7,500, that's $90K a year. That's half of 180 in GCI. I mean, if your average commission is 10 grand, that's 18 deals. Solo agent can do that. You can definitely operate at more than a 50% profit margin. At that number of units, probably 60, maybe even 65, depending percent profit margin. So that's very doable. Yeah, good question. What other questions do you have on this one? Paying yourself a salary. You think you can do it? You might not be in a position to right now, or maybe you are. On the next slide, I'm going to be asking for your action items that you're going to do in the next 24 hours with something that you learned today. And I'm going to give you a little link. You ready for it? Boom, there's the slide. I know it's just a slide. But this slide is the one where I ask for action items. I probably cracked like maybe 2 jokes where people smile a little bit. I'm not entertaining enough for this to be a pure entertainment hour out of your life. You've got to do something with this so that you can go and keep more of your money. And I'd like you to write down what that is, and then I'd like you to share it. And it's cool if it's just one thing. In fact, it's great if it's one. I'd rather one thing than 5. And it's got to be in 24 hours, because if you take action on one of these things within 24 hours, you're significantly more likely to see it through. If you don't, it might end up your notes here in that bottom drawer of your desk. And 13 months from now, you can look at it and go, man, that was a wonderful session. So I've been talking to buy you time to write down your action item, and now I'm going to ask for it. What are you going to do with this?
I'm going to set up the, what is it, the $1 million real estate account in my QuickBooks, which I haven't used in 4 months.
Oh, the chart of accounts. Yes.
Chart of accounts.
Yeah, it's great. Here's my guidance on the chart of accounts. When you download it, it's going to be the full chart of accounts. And there are going to be a lot of categories that you don't need. Simple's better. So don't be committed to filling up the categories. The idea is that you use as few categories as you need to use in order to get your P&L done. That's a great action item.
Categorize my bank statement.
You like, so do you have a system? Are you gonna make some rules, or are you just gonna go through the statement manually?
Well, I can see if I can make some rules, because I had a separate account that I'm using, and it's only for business items, but I just know they're there. I haven't actually, downloaded them and categorized them. So
Okay. All right, very good.
I'll be completely transparent, and I will show you my shoebox of hell and lies. So mine is a light bulb box. but I'm going to take this.
That's awesome.
And there's not too much in it. So that's good. I mean, it's not like a whole year's worth. So that's good.
11
But
months tops.
maybe 10, maybe.
Maybe 10. Okay, that's fair.
So I'm going to take that within the next 24 hours and throw out the stuff that I don't need. Because I'm sure there's things in here that I put in here that's not supposed to go in here. But I just thought I would share that I do have a box of lies probably.
That's great. And then you can have like a burn party after it's all sorted out. You can light out.
Yay, yeah.
It's very cathartic. Yes, yes. Great. Thank you for sharing. A real life, folks, a real life shoebox of hell and lies. You saw it here first. Love it. How about one more? Can we get one more action item?
Mine isn't quite a shoebox. It's just a pile of files.
Oh, a pile of files. I like that.
You know, everything is strategic. It goes in one place. And when it's time for me to do taxes, I sort everything out. I enter them into a P&L and I hand it over to my tax person. So now what I'll do is I'll convert the pile of files to the chart of accounts so that I can sync it up with my accounts and print the P&L to email it to them.
That's great. And you know, for doing imports like that, I believe there's actually a function with QuickBooks Online, if that's you use that, you can send an email to a certain like email address and it'll like interpret information off of expense receipts and stuff like that. I haven't used it yet, but I read about it and I'm like, well, that would be cool if I still have my shoebox, right? But I don't. So for those with a shoebox, there is a feature that might help with that.
Cool.
I saw Teresa put in the chat, you're going to create a business account and start planning for a business entity in the future. Love it. Any other ahas you want to share before I do one quick little wrap here?
I will say that here at Keller Williams, Dallas Metro North, I got an expense tracker from them, which has been awesome. And I really love it. Now, you do have to go in and manually put them in, but if you do that and you can categorize it and it splits it out in your the money coming in and then your expenses to where money goes to tech, or money goes to all your fees and dues and whatnot. So it kind of breaks it out. And then at the end, it gives you kind of a percentage of kind of where you should be in those categories. And so it's just a good snapshot on, where you fit, I guess.
Absolutely. Yep. And I'm not sure if that's the same or different from like, the MREA budget worksheet. But if you guys go onto my website, which is alexfenske.com, I've got a resources page there where I've got some downloads, stuff like this. It's got the chart on there. It's got, which has the percentages of like, here's the best practice. So yeah, there's some info there too. And yeah, you can do it yourself. I kind of skipped over that because what I often find is that agents have best intentions and never get around to filling that out. So if you'll fill it out,
when you get
great.
busy.
It is. Well, and again, that's not how you make money. That's where you bring in a system, a tool, or a person. Those are the three forms of leverage: systems, tool, and people, right? So you bring in one of those to do it for you. As you can see here, I've got that QR code. If you're curious about what coaching might do for you, you don't currently have a one-on-one coach, scan that QR code. And you can do a complimentary business audit with Shannon Steer or Joel Rico, our leaders of the organization. And they'll just kind of talk through what you're going through, where you're at, what your goals are, and how we might be able to help. So feel free to go and create or schedule one of those. Won't cost you anything but about 30 minutes. And then also Shelby put in the chat the registration link for the March 13th event in this series, which is going to be Kara Shug and Robbie Faith talking about agent to investor mastery, which is a hot topic. I love it myself. So be sure to sign up for that. Any parting thoughts or questions before we wrap it up here, guys? I appreciate you all. Thanks for plugging in, and I wish you Godspeed on your action items. Go get them done.